Hello, everybody. Welcome back to Earnings Call. I'm Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you've seen our show before, you know we don't just talk about stocks. We talk about how to profit from company earnings announcements. We are right in the thick of things right now. We have 1,246 companies that report this week. We're only watching 26 of them. And our list that we go through is actually pretty light, even lighter than 26. So the week of August 10th here, it features a much lighter lineup of big cap and mega cap companies with large number of small cap names that generally fall outside of our earnings strategies. Okay. As a result, technology, AI infrastructure, semiconductors, and financials should remain the primary area of focus this week. So, with fewer qualifying stocks that are going to report, we're going to really zero in on the few that do, such as Cisco, Applied Materials, Supermicro, Berkshire Hathaway, and C. And those are the primary names to watch. So we're going to go through the list and take a look at the best potential candidates. And I'm going to talk about a trade that we did last week and see how it did. And then I'm going to give you another trade for this week, all starting right now. All right. This is really an interesting week in so many ways. You'll see the overall list here. And for having over 1,200 companies announced this week, I was really surprised that Thursday and Friday, especially Friday, even though there are companies that have earnings on Friday, most of those companies, in fact, none of the companies that announce on Friday are priced over $20 a share. At least they weren't as of yesterday. Okay. Some of them, most of them, half of them are actually around $7. So that's what I'm talking about when we talk about small cap and, mostly small caps this week. It's really interesting. And then there's some names like Simon Property and Ferguson that don't appear on our list this week that normally we talk about, but there was an interesting just kind of confluence of where pricing is and where stocks are currently trading that just eliminated a lot of candidates. So I really had to narrow it down and you really find the quality here. And even within this list that we're going to talk about today, you're really going to have to pick your spots this week. Okay. So on the left-hand side of the sheet here, we have our breakout stocks. These are companies that have, on average, a double-digit move through earnings. We're talking 10% or more through the earnings announcement. On the right-hand side, these are what we call quiet stocks. These are great for selling premium into the earnings announcement. We like to use a strategy called an iron condor for that. Whereas for the breakout stocks, we like to use straddles and strangles. Okay. Now the quiet stocks, they only move single digits, as I mentioned, and we're talking, 4 to 7% is usually in our wheelhouse. And we're going to talk about these starting right now, actually. Let's talk about the quiet stocks first this week. And you're going to see we have just a handful of names. And let me give you an example of a quiet stock that actually had earnings last week that is one of our favorites, and that's McDonald's. Okay. This is a consistent quiet mover with the average move being in the low single digits. And you can see the last earnings announcement that I have there highlighted with the ellipse that, you know what, this stock didn't really move through that earnings announcement either. Okay. So we love selling premium on these names and being able to capture that expensive implied volatility and then wait for the earnings announcement. And then after the earnings announcement, that implied volatility that's been bid into the options, it collapses. And that's how we profit on these particular trades. Okay. So let's begin to look at our list because, like I said, this is an odd week. All right. We're going to start with Berkshire. Okay. Berkshire Hathaway is a well-known name. It does have the unstable stock symbol with a period in the middle of it. So this is BRK.B, not .A. This is .B. And the interesting thing about Berkshire is that they announced on Saturday. Okay. In fact, I'm going to change this. Some charting systems will show a Friday declaration. Okay. Some will show today. All right. And so I wanted to include them today, even though their earnings release was on a Saturday. They're one of the the companies that usually announce on the weekends. There's a smattering of them, but they are usually insignificant, or they're drug companies. All right. And they try to sneak the earnings announcements out there when nobody's looking, type of thing. But Berkshire, this is a $1 trillion company. Okay. And they had earnings. And as you can see, Berkshire is up. It's actually higher by 2% today, which is just inside the estimated move. Okay. And we're the market makers. Again, these are not numbers that we generate. These numbers are an average of the past movements of a stock combined with what option market makers are presenting us. Okay. They're pricing in the estimated move of the stock, and there's formulas for that. There's about 4 or 5 different formulas that provide that estimated move calculation. And I actually went and researched this. I looked on 3 different AI services. None of the AI services list all 5. Okay. And one of them in particular, none of them listed, which is, I find very interesting. And well, quite frankly, I'm not going to tell AI what it is. Okay. Because it's a good little secret that I'll provide for my subscribers. Okay. So anyway, that was Berkshire. So they had a nice move. Then we really jumped to tomorrow. Okay. And we have Franco-Nevada that will announce after market close tomorrow. And the average move here is about 4%. Now, the thing about this stock, and I believe, let me just confirm, the thing about this stock is that you'll see here, it's hard to see. I know the print's kind of small, but they don't have weekly options. Number one. Okay. I like working with weekly options on these iron condors because, again, these strategies are time and volatility sensitive, and we kind of balance that back and forth. And when we have to extend the amount of time, that increases the odds that the stock will move outside of our break evens. So I don't usually like to go out of a week. And this is obviously 11 days. But notice also the strikes. Okay. Every $10. All right. So while every $10 means you have essentially $1,000 risk when you do a vertical spread minimum, okay, of a $10 wide spread, you have a risk of $1,000 minus your credit. Okay. And your credit here, I priced it out. It's going to be just around $300. That means you're going to risk 7 to make 3. Why would you do that? Well, the odds of success. Okay. That is the thing. And I'm amazed at the number of times people will actually trade something that only has a 25% probability of success and then complain about it. Hey, 25% probability of success. We like our probabilities to be much larger. That's why we show you what we show you. Okay. Trying to put the edge in our favor. Okay. So again, doesn't really kind of qualify. It would, because as you can see, our scaling here, look at this. It's in $25 increments. If you can get this wide enough and get the premium there and you have a larger account, but this trading Franco is not for the smaller accounts. It's really for a larger type of account, say $25,000 or more for that. Another one of our favorites is Brinker International. However, Brinker is in an interesting place. Okay. Now, normally we like to trade Brinker. As you can see here, it will announce on Wednesday, August 12th, before market open. The average move here is 8%. But, and given its current price, over $100, now it's over $200. This gives us the ability to absorb that kind of move, a 7 or 8% move, and we can absorb that. However, now that it's above $200, for right now, the options have not kind of adjusted. In other words, above $200, they are every $10, just like Franco-Nevada was. Below 200, they're every $5. Now, I like $5 wide because our risk is then a max of $500 minus our credit, meaning our max risk usually is around $350 on average. Okay, around 350, maybe 360, 370, somewhere around there. Okay, so for Brinker, then we'd have to go $10 wide. And again, smaller accounts, probably wouldn't be trading Brinker right now. Plus, it has this unusual move. Look at this move. It has literally gone since the beginning of June. Okay, trading at 140. It's gone to $226 in the span of 2 months. Okay, this thing has caught what we call caught a bid. But you can see around earnings that this thing is usually pretty quiet. Okay. Did have a little gap down here. But again, you can usually trade wide enough. But now, because you have $5 below $200 and then strikes every $10 above $200, that makes for kind of an odd little thing. Now, could you do a $5 wide on the put side and do a $10 wide on the call side? Yes, you could. But your margin is going to be $1,000 minus whatever credit you take in, and you will have what we call a broken leg or broken wing iron condor, one of the two. Okay. So, and again, do people do it? Sure, people have done it. It's nothing new. But again, Brinko will probably have to skip. Now, Cisco, here's the thing about Cisco. They're going to announce Wednesday afternoon. Okay, Wednesday after market close. The average move here is just 6%. However, you can see that the past two earnings announcement, this one was about a 13% move. This one was up closer to 14% move. Out of the past two earnings announcements, double-digit moves. Okay? Now, before that, okay, this thing was, okay, here's a little bit of a move back here in November of last year, but prior to that, it's usually pretty quiet. Okay, now notice you're down at $70, so this isn't as big a move as it would be if it was, up here. Okay, now we're at 124. I'd be very careful with Cisco. All right, just given the space that it's in, and its average move is now, even though it's still around 6%, and I can tell you, this is how fast the market makers and those of us that have traded options for a long time, I can tell you what market makers are kind of pricing in for this thing. If so, 124. Let's see here. $10 move on a $124 stock. Okay. They're pricing in actually about an 8% move. We might take another look at that, given it $124. If I can get my break evens about 10% out of the money. But here's the thing. It's moved over 13% the past two earnings announcements. It's shown a little bit more volatility. I think the prudent thing would be to sit tight and just let this whole AI thing play out. Okay. This is a trend. Okay. Right now, it's a theme. The theme will evolve. Okay. For example, we all need a theme. Right now, the theme is AI, and everything's driven by AI. Okay. I'll tell you, back when I was managing a hedge fund back in the early 2000s, my theme was anything that goes into the ground or anything that comes out of the ground, I was very bullish on. Very bullish on. And my performance over literally a 10 to 12 year period was killer. Just killer on that theme alone. On just that one theme. Anything that went into the ground or came out of the ground. Okay? So that was just a theme that managers, often develop and probably need to have, okay, to outperform the S&P. That was the thing. Moving on. Okay. A new name to our list here is Applied Industrial Technologies. Okay. AIT, Applied Industrial. This is happening on Thursday, August 13th in the morning before market open. AIT will have an earnings announcement. The average move here is about 5%. Okay. This one might be, we'll see how options are being traded. And again, you want to just kind of pull up options data. And now here, August 21st is the nearest strike. That's the thing. This thing moves quite a bit in between, over the course of a week. So waiting, you literally what would be a little over a week for a payoff, and strikes are every $10. Okay. Again, bigger account would be required to trade AIT. Believe it or not, we have $1,000 stock that has strikes every $2.50. Okay. There are those out there. Stocks that are $800 that have strikes every $5. These are getting more and more prevalent, but this is kind of old school here for some of these stocks that we have this week. Okay. Where they only have monthly options. They don't have weeklies. And then they have strikes every, $10 once you get above $200. Okay. That's old school right there. That is old school option trading right there. But interesting, quiet stock. And you could just trade the implied volatility. You wouldn't get the max reward, but you might get a nice chunk of that depending on the pricing. Anyway, let's move on, because one of our headliners this week is Applied Materials. Okay. Applied Materials will announce on Thursday after market close. Thursday, August 13th. The average move here is 7%. Okay. So that's why it's on the quiet list. But here's what's making me nervous. I'm not really sure about the pattern. Okay. Now, again, I would watch option pricing, but here's what I was seeing. Now, again, just a quick little tutorial here. When you draw trend lines like this, you want touches. Okay. Touches are your main thing. I go off of closes. Okay. Closes and not opens typically. Okay. So, but I will go off of that open right there and that close up there. Then this close, this open, this high, this open. Okay. It's again about touches. Okay. That's why I didn't go down here to that close. Okay. Up here. And look at this little wedge that this stock is forming. Okay. Notice the just wanted to see where the 21 period moving average is. Notice we opened up right on that line and then popped off of it. In fact, I didn't even have that line as of yesterday. I think I have my line back here. Okay. So something like that. So it's coming into that wedge. Anyway, I just wanted to show you a quick little technical analysis of this. And when these things enter these, and technically it usually pops out. Okay. So I would just be very careful with AMAT this week because as you can see, look, last earnings announcement, nice and quiet. Okay. Earnings before that, nice and quiet. Nice and quiet. All right. So, a little bit of a volatility there. The past few earnings announcements have been very quiet. So if you're more aggressive and you play the numbers like a professional trader does, we play odds and probabilities and calculate risk and everything. Again, this is a $5 stock and it's going to have weekly options and it's going to have, let's see where strikes are. Strikes are probably every $5. They're every $2.50. Look at that. $500 stock that has strikes every $2.50. So you can definitely get some get a good trade that's dialed in on Applied Material. Okay. So really that's our quiet list for the week. Okay. Believe it or not, there are very few candidates, and the candidates that are there are, wow, we need to be very careful with them. Okay. So that takes us to our breakout list. Okay. the stocks that move on average or have an estimated move of double digits. Now, here's an example of that, and that's Applied Materials. Applied Materials had earnings last week, and you can see I have the ellipse there through the volatility. And guess what? This stock has a double-digit average move, yet it only moved about 7%. It dropped. You see that red candle there in the ellipse, dropped about 6.9, around 7% on after the earnings announcement. And then look at the whipsaw. It's up about 6% today. So a little bit of a whipsaw there, and it did not move its estimated move. That is the risk of doing straddles and strangles on some of these stocks, is that you will have an earnings cycle, probably 1 out of every 4 or 1 about every 5 to 6 that doesn't go right. Okay. And that's just part of trading. All right. So if you have a loser, don't think that the strategy or the system doesn't work. Okay. Years ago, I had one of my assistant traders do some analysis on this very strategy. And back in the day, we really only found 8 stocks that were consistently moving double digits, and they were like every earnings cycle. And it was great. And they did for a long time. For many years, they moved double digits until they matured or something happened. Then they stopped, which is kind of the case here. So let's look at our list this week, okay? And we are front loaded. In fact, there's a key stock this week that's not even on our list. I had to kind of leave it out because, well, there were decent candidates right up until that. So you're going to want to stick around and see which one that is. But it'll announce on Tuesday. I'll give you a little hint, okay? But after Wednesday, really, there's very little available from a consistent mover type of performer. Okay, so let's jump right into the list. In fact, we'll start with Monday.com, which is traditionally a mover, and you can see here that the average move and the estimated move was a double digits, but it didn't. It gapped down about, well, actually, here's the thing. It's gapped down this morning. That was the 13% move. So it matched its expected move. Okay. Now it's rallied up. Look where it rallied up to, right to my long-term moving average. By the way, that's a 161 moving average, not a 150, not a 200, a 161. You got to listen to me more to find out why I use a 161. Okay. As you see, it's slicing down there, and now the stock is only down 5.7%. So unless you exited quick, you had a quick trigger finger this morning, well, I can tell you pricing was pricing for that 13% move, so there was no edge. There was no edge in trading Monday.com this time, okay? Then we move on to Hims and Hers. They will announce aftermarket close today. The average move here is about 11%. All right. And kind of like I drew on the last chart. Okay. We do have kind of a, golly, you could almost, is it not going to let me? There it goes. Okay. Look at this. Okay. Close, open, trade through. Okay. It's forming another wedge. Okay. Love that going into an earnings announcement. Okay. And again, the more touches make a trend line more valuable. Okay. More touches. That's why I didn't draw it down to here. Okay. Drew it off of this and this. Could have probably even taken it down here to there. Look at that. Touch. Not as good, I don't think. Probably right there. Okay. That's the wedge. Okay. That's Hims and Hers. They have about 11%. Priced it this morning. It's pricing in right at 11%. So no edge there. However, that can change. Okay. But it's today. If if I saw on Monday that stock on Thursday there was no edge, trust me, I'm checking tomorrow and I'm checking Wednesday. I'm checking all the way up to the earnings announcement to see if an edge appears. Okay. So moving on through the list, we have AST SpaceMobile, cool name for a company, I think. They will announce later today, after market close. Okay. The average move here is 12%. And this stock does typically move, and it moves usually in and around the earnings announcement. Okay. So the fact that it's got like this 4-day little quiet pattern, it's kind of encouraging. Maybe we'll get a little pop or drop. I wasn't seeing an edge here this morning, but it's definitely one to watch as the day goes on. Okay. And it's a $69 stock. So you're going to be spending $700-800 probably for the straddle or strangle. Again, you want it as cheap as possible. So trying to get that down to maybe $6, or so would be ideal. All right. Okay. Continuing to move on. Here's the one that did not make the list, but this is a consistent mover. This is C Limited. Okay. SEA Limited. Symbol is SE. They will announce before market open tomorrow, August 11th. That's on Tuesday. The average move here is 12%. And this is a pretty consistent mover, I got to admit. Okay. Double digits around each and every move. On this particular one, it took a little follow through to the downside to get that kind of performance that we were looking for, but nice gapping. So there is a bit of volatility here. I would definitely be pricing this out as we move into the afternoon for maybe a little quick profit. But again, I wasn't seeing an edge. Okay. All right. Moving on. We have Super Microcomputer. They will announce on Tuesday, August 11th, after market close. The average move here, believe it or not, is 16%. Okay. This stock is a mover. Notice this gap here. That was not earnings. Okay. Earnings back here. Or look at this off of this little wedge right here. This was an earnings event. Okay. And then boom, just down it goes. Okay. That is what we're kind of looking for when we get this kind of consolidation area here. And again, do you see it? Do you see it? Okay. We have connecting as many points as possible. Bring it up and then across the top. Okay. Right there. Okay. We popped out today, but we will see if we blow out tomorrow after the market close. So I'll leave that little wedge on there, just like this past one back here. Okay. Looking for a big move. All right. CoreWeave, a little higher price stock. CoreWeave will announce later in the week. They're going to be Tuesday after market close. CoreWeave, again, a mover, consistent mover. We're expecting about 13% for CoreWeave. Okay. And pretty consistent mover there. So just check pricing, and you're just looking for that pop and then that move. Okay. Here, pop, drop, follow through to the downside. Okay. That's kind of what we're looking for. So definitely a move there. Again, is there going to be an edge? I don't know. We'll just have to price it out. Also tomorrow afternoon on Tuesday is Firefly Aerospace. Cute little name, Firefly Aerospace. They will announce Tuesday after market close. The average move here is about 12%. You can see here last time it had a little volatility through earnings, but didn't meet that double-digit threshold. It took a little move here, and depending on how long you had till expiration, you might not have caught this rally that the stock had. But this is in a space that could see a little bit more volatility, but I'd be very careful with it. I would definitely watch this. This is a new one on my watch list, and just kind of seeing how they play out given their space. Okay. It's a $25 stock. Definitely the straddles and strangles will be affordable for smaller traders. However, I wouldn't do one if the pricing isn't there, meaning I want to get a 10% move out of my options when this average is a 12% move for the stock, if that makes sense. I want my trade so cheap that it only has to move 8% or 9% to move, to profit. But then if it moves 12, then that's an even bigger profit. All right. Okay, we're getting down to the end of the list here, but Nebius will have an earnings announcement on Wednesday before market open. The average move here is 11%. This one is also in that AI space. So notice the increased volatility compared to this back here. Notice that the daily moves were not as dramatic as they are now. And look at my scaling here. This is in $25 increments. This stock moves around. So option pricing will be priced accordingly. However, we do have the infamous little wedge that is appearing here. Okay. Very similar to another stock that we've already looked at on this pattern. Okay. There you are. Okay. Right into that wedge. Again, most touches. Look at this, bounced right off my 161-day moving average. It's like magic. Okay. And rallied higher. All right. Now, this is definitely one to watch. This would be for more expensive accounts or more higher value accounts. At $187, you're going to be spending $2,000 to $3,000 for a single straddle or strangle, meaning buying one contract, one call, one put. So again, not for everybody, but definitely one to watch. And that's a Nebius having earnings Wednesday morning. And finally, closing out our session here before I get to the trades. Okay, we have Alpha and Omega Semiconductor. Does the name need to say any more? Semiconductors in the name. Okay. They will announce earnings on Wednesday, August 12th, after market close. The average expected move here is about 12%. Okay. At a $34 stock, that's affordable for smaller accounts. We're definitely keeping our eye on this one. Okay. For later in the week, like Tuesday, like tomorrow. All right. And what do I mean by that? Well, we have our earnings club. Okay, where you can subscribe to my trade alerts. And what I show here is what I actually publish. And I give you the strikes, the pricing, the entry, any updates along the way, the exit instructions, all of that for one heck of a price. Very cheap. So look for the link below the video a little later. Okay, so recap of our whole week this week. As you see, there's just a handful of stocks, and I tried to give you a sample of how I go through these and edit the list. Okay, and just even though they made our list, that some of these, like Brinker International on Wednesday, I like trading it, but it's just not fitting, so I'll skip it. Okay, Cisco, I like trading it, but it might be more volatile than usual, so I'll skip it. Okay, it's all about capital preservation, picking the spots, and profiting when we can. Okay, taking those profits. So, with that, let's talk about our trade from last week, and then I got a new trade for you. So last week was a trade on Vistra Energy. I think they're now called Vistra Group, but I still call them by their old name. We had an iron condor. Now, here's the thing. For those of you that are earnings club members, normally I was putting out trades every Monday. For these iron condors, timing is everything, and putting out a trade too early can be a problem, which it kind of was for Vistra Energy. However, don't think it was a loss. Okay. After we entered, stock had one bad day and dropped to the bottom of our range and then trickled down for the next couple of days. Now, if you see here on the chart on the upper left, there's a red vertical line, and that is our exit day. This stock came down to our lower strike price of $139 and bounced right there. I sent out the exit alert early in the morning. Okay. And I said, newer traders might need to go ahead and exit. You might have a small gain. You might have a small loss. Those of you more experienced, you can wait. Okay. And you can babysit this thing because the risk of assignment. Okay. Well, the stock, sure enough, rallied. Now the put's out of the money, the 139, meaning it's trading above 139, got to 140. But the problem is I had to babysit. I hate babysitting trades. I had to babysit on a Friday all day just to make sure the stock didn't turn around, drop, and all of a sudden I'm assigned long stock and I got no protection on it. Okay. So that's what happens when you're assigned on a short put. You get long stock. Okay. If you didn't know that, but it didn't. So here we exited about 30 minutes before market closed. Okay. For about 6 cents. And got a nice little profit, $126. Our max profit was 131. So we gave up a little bit to go ahead and just close it out about 30 minutes before market close. Okay. But nice little profit. That's a 1.25% return on portfolio. Okay. In 4 days, to give you an idea of how powerful these are when you kind of get on a roll of these. Okay. So that is our trade for last week. Vistra Energy. We had a nice little win there. All right. So what do I have for you this week? Well, believe it or not, in researching all the kind of things, I landed on super microcomputer. Okay, SMCI, and nice little strangle. We call it a baby strangle when the strikes are close. Okay, a straddle is you do the same call, same strike call, same strike put. That's a straddle. Even when you separate by maybe a little bit, like $1 or $2, it's a strangle. Okay, anytime you have a little flat bottom on your risk graph, that's a strangle. Okay. So we're doing a strangle on SMCI. We're looking for that initial pop after the earnings announcement or drop. It can go either way. It can go up or down. I don't care. I just want it to move. SMCI is our trade of the week. I've already sent that trade alert out to our subscribers. They already have it and know what we're doing on it, know the strikes, they know the pricing. And believe it or not, after the alert went out, the pricing actually came down. So they're getting a better deal than our trade alert is. How about that? Love it when pricing improves through the day. That's what we like to see when we're trying to enter a trade like this. So that is our session for this week. Hope you enjoyed it. Lots of moving parts, even though there's not a lot of quality. So, but that analysis goes into our trades each and every week and goes into our analysis. So we do it each and every week. And make no mistake, just because small caps and mid caps are featured now, the next couple of weeks we get a little lighter in numbers, but there are still some big names that have yet to announce earnings this cycle. So we will get back into that rhythm of having well-known names having earnings coming up in the next couple of weeks. So you're going to want to join us each and every Monday right here on Earnings Call. Everyone have a great week. I'll talk to you next Monday. Take care.